Welcome, everyone. We will get started in just a moment. We are getting ready for our demand for higher education programs. We have a special guest from Rize Education.
Thank you very much. And as we get started, the usual housekeeping, if you have comments or questions, please feel free to leave them in the chat or the Q&A. Either one works. I'll be having a look at them both, as will Monica. Happy to take questions as the webinar goes on. And we'll answer them as they come in, time permitting. So without further ado, let's get started. We'll be talking today about demand trends in higher ed, both in terms of student demand as well as in terms of employer requirements. So we always think of that as sort of a barbell. You got to have both those things in order to really understand the attractiveness of an academic program. Today, I have with me Charlie Anastasi. Charlie, if you could introduce yourself, that'd be great.
Hi, everyone. Charlie. I'm the VP of Revenue and Partnerships here at Rize Education, and I'm looking forward to diving into a little bit of what Rize does later on in the presentation.
And by way of introduction too, Gray is working very actively in this whole question of how do you grow a higher education institution? And I'm working on a book, haven't made a lot of progress so far, but done a lot of the research on strategies for growth. And as you look at those strategies, certainly program innovation is one of them. And the question then becomes, okay, how do I accelerate that? And what we found is a group of entities, Rize being one of them, that can help accelerate your ability to grow, in particular, in Charlie's case, around programmatic innovation. So, take the time down from 2 to 5 years to a few months. And most of us need that growth stimulus sooner rather than later. So we thought that was important, and that's why we've invited Charlie to join us today.
Perfectly said.
So a program evaluation system is what Gray does, and I'll just spend a minute on this by way of introduction for any of you who don't know who Gray is. We specialize in this question of program evaluation, and we believe that there are a number of data elements that need to be considered. So it starts with markets. And many people make the mistake of thinking labor market data is all you really need to know about. That's fundamentally untrue. I've seen, one program where they invested 500,000, another way invested $1 million, cumulative total students between the two programs of 6. So you really have to be careful that you look at student demand as well as labor markets, so that you create programs where students are interested, they'll come, they'll generate tuition income and fill the seats that you invest in creating. Not to say that labor is not important, it is, but you need both student demand and labor market data. You also need information on competition in markets and an understanding of what the relevant degree level is for a given program. Margins are also important, not because you're for-profit entities, most of you are not, but you need programs that generate margins to subsidize small mission-critical programs that may not be able to stand on their own 2 feet financially. So that cross-subsidy is normal. But you need to keep track and make sure that it's running at a comfortable level that's sustainable for your institution. Academic standards go without saying. You need to be performing at a level that meets your goals for academics. That might be the percentage of students who graduate, the number of people who are passing relevant exams like the NCLEX, the nursing exam, and so forth. So that's an important dimension. And of course, the super dominant element here is mission. That's what a school is about. Again, not a for-profit. There are lots of things you're mission-oriented institutions. And keeping that mission in the forefront when you're thinking about programs is an important variable. The data helps to inform that, but it doesn't override it. Also important is there is no AI algorithm yet. You'll be happy to know for making program decisions. Might be helpful if there were one. We may even develop one. But if we had one, I wouldn't think it would do much more than help inform a process that needs to involve the right people in an effective, reasonably quick process to make program decisions. And there's no substitute at this point for people's judgment. The data can inform that, but it can't replace it. So that's what a program evaluation system is. It's not just software, it's not just data. It's the right data in the right software with the right people and process wrapped around it to make good decisions. Let's take a look at what's going on in student demand. To get us started, let's make sure we understand how to read the chart. The dark blue lines are 2021, the medium blue lines are 2022, and the light blue lines are 2023. And obviously across the bottom, we have months. And what we're hoping for here is actually what we see in this data set, which is the 2023 light blue bar is higher than 2022, which is higher than 2021. And that's actually been true for the last 6 months for which we have data. So that's quite encouraging. The increases are not large. This month, we're looking at a 2% increase over last year. So it's not huge, but after the long erosion in enrollment in higher ed, it's encouraging. Now, it doesn't say that that turnaround has happened right now. Google's a forward-looking indicator. It suggests what people are looking for in the future, and certainly not all of those Google searches are going to turn into students. So do keep that in mind. It's an indicator. It's not enrollment, which we'll come to in just a moment. But the beauty of Google is it is forward-looking. It's one of the few metrics out there that really tells you what might happen in the future. Everything else is either what happened recently, or in the case of iPads, what happened some time ago in terms of student interest. What's hot? What are the largest programs out there? Well, the top two are not a huge surprise. We've got business and nursing leading the pack, and followed by Surge Tech. There are several other healthcare programs here, social work and public health. We've got a few tech that made the highest volumes, cybersecurity, computer science, and data analytics. I find cyber's presence here very interesting. This is a program that essentially didn't exist 10 years ago, and now it's one of the top 10 in terms of search volume. So very encouraging in terms of the future growth for that particular program. Fastest growing programs in terms of Google search. So this is the things that are likely to grow in a relatively near-term future. 61% increase in medicine. I found that I've never seen that before, excuse me. Very large increase in a very traditional field, certainly one where we need more graduates. I'm not sure we have any more seats, by the way, so that's going to maybe become a constraint. Fine arts up 51%. Got two other arts programs here moving up, cinematography and music. So growing interest in the arts. And health is the other big field. So health services, we've got general, dentistry, and physician assistant, all up over 20%. Then we have a few random entries here: law, international business and trade, and school counseling guidance services, all up approximately 20% or more. What is happening overall to enrollment? Many of you have already felt this. It's been a very weak several years at the bachelor's level, and the downward trend continues, although really at 0.03%. I think we can call that flat. Basically, year over year, it's in terms of bachelor's programs. Master's, the picture is not so pretty. While bachelor's got hit a while back, and it's been weak for a number of years, master's had been a bright spot. 2021 it was actually up 8%, but recently it's been in a sharp downward trend, down 5% in 2021-22, and down another 7% in 2022-23. So what was a growth area in terms of enrollment in master's seems to have turned and is now declining at a pretty good clip. I suspect part of what's going on there, by the way, is the economy and people are working instead of going back to grad school.
Bob, I have one quick question for you. Sure. Google search results don't distinguish undergrad from grad. Is that correct?
Correct. We can't figure out how to do that yet. I think a lot of people who are searching aren't going to specify the degree level. They'll get to that as they go through the options that they see. So it could, I should say, it could distinguish that, but we don't yet. So what's growing in terms of enrollment? Cybersecurity, number one at 28% growth. Some of that's going to be coming out of other related programs like computer science. So keep that in mind. We've got a number of other STEM programs here. They're growing very rapidly. Computer science has actually managed to grow despite cyber, and finance up 9%. We have aerospace up 8%, which I find that's going to occur a couple times. IT up 8%. So STEM is doing very strongly in terms of new enrollment. Some other areas, we have aerospace. Here should be actually under STEM as well: health, education, and fitness, cinematography, animal sciences, and education general. Fastest growing new programs at the master's level. We've got a fair representation of STEM here. So 6 of our 10 are actually STEM programs and the rest are health. So at the master's level, it's all about STEM and health when it comes to growth. Data analytics in the STEM side up 28%, IT up 20%, medical informatics up 9%, business analytics up 7%, engineering industrial management up 6%, and information science studies up 5%. So we're looking at most of our list of fast growers are in STEM. Second fastest area is health. Mental health, unfortunately, is a growing space. Lots of interest in it. Enrollment up 33% in psychiatric mental health nursing. Clinical psychology also up 6%. Audiology, speech language pathology up 5%, and physician assistant up 3%. I have to pause on this mental health question. I think, again, regrettably, I think it's going to be a growing area for some time to come. For a healthcare practitioner, at least allows them to be around patients who are not contagious. I think that concern will be with us for some time and may be eroding interest in traditional programs that have been very popular, like nursing, and having those same nurses potentially get into specialties where they don't have to deal with that issue on a day-to-day basis, or at least not as much. Now, what's happening in the less than degree segment? Here I'm going to share what the biggest things are because I find it very intriguing how diverse these really are. This is enrollment in Coursera, and these numbers are massive. The smallest program here, the 10th largest, has had 33 million people enroll in it over time. Do keep in mind that this number is since inception of the course, so it's not last semester, last year, even the last couple of years. Many of these courses have been around for 3 or more years, so it is cumulative enrollment in those courses. And another time, I'd be glad to share what the growth rates are, where we look at just the last month. But Science of Wellbeing leads the list with, and it's nobody close, at 113 million people who've enrolled in that program. Learning how to learn, 91 million people have enrolled. Then we get to some tech, but this, I think the real interesting thing here is it's not dominated by tech. We've got programming, Python, supervised machine learning, and tech support fundamentals all making the top 10. And then it's very eclectic list from there. English for career development, very, again, that's probably foreigners taking this to advance their career. Contact tracing, intro to psychology, successful negotiations, and first step Korean. Love to see a language on the list. I think many of you are suffering through the decline in languages at your campus. Very regrettable. I used to speak a couple or 3 languages myself, but I'm afraid that trend is here to stay. But it is nice to see that people are at least looking for this in a less than degree format. Now let's take a look at employment. The picture here is not great, down 23% year over year across all degree levels. Most of this is still coming down off the high in terms of job postings that was created by first the decline in COVID, then a huge surge coming out of COVID in job postings, and that's now leveling off to what are more normal levels. But I do worry, that's been a good story for some time now. We're starting to come to the end of that spurt, and I hope that the job postings will keep up year over year, just in terms of the impact that has on people and our economy. I will say, though, for schools, a decline in job postings is not all bad. It is the change in the unemployment rate, is very highly correlated with enrollment. So if the unemployment rate is falling, that is, we have more people employed, that actually means we'll have fewer people on campus. So if the Feds continue to tighten interest rates, they drive the economy down a little bit, that should come back to us in terms of enrollment, as people find it a little harder to get or keep their job and go back to school to advance instead. Now, what's going on out there? What's hot and what's not? Job postings, nurses is number 1. I think this is high in part because we can't supply, so we're not filling the jobs that we have. Very difficult situation in nursing. Has been for some time, but COVID made it a lot worse. And I think it's something we've got to, as a country, have to figure out how to solve. General and operations managers, before I go further, I think the biggest thing about this list is how eclectic it is. There's growth in almost every part of the economy in terms of jobs. And this list shows that it's not just healthcare. Yes, registered nursing is high. We've got general and operations managers, computer support specialists, secretaries, teachers, sales reps, human resource specialists, first line supervisors, project management specialists, and more teachers. That is as eclectic a group of the top 10 as I've seen, and suggests that the economy as a whole is very healthy. Hopefully my cough will pass here. Highest job postings growth, interestingly, physical therapists, followed regrettably by tax preparers. I suppose in a way that's good news, in the sense that maybe there'll be people out there to help us with our taxes. But if you thought that was good, then we have a suddenly growth in lawyers. Not my favorite. I apologize to the lawyers out there. Then special ed teachers, interpreters, first line supervisors, mental health, substance abuse workers, dietitians, operating engineers, and coaches and scouts. Again, a very eclectic list. But what I would draw your attention to is that the top 10 ends at 2%. That would suggest that after this, the programs are, the job postings are not growing. So for the vast majority of occupations, and there's 700 of them, growth is 0 or less. And that's just because of the decline we saw overall. These are the programs that managed to grow despite that overall decline. Now let's take a moment and discuss benchmarking and curricular efficiency, and benchmarking in particular. One of the things that you need to understand when you're evaluating programs is what are the normal costs to run that program? And if you have the program, are you performing at or above that cost level? And in this case, you can see for music performance, for example, and we're looking here not just at cost, we're looking at contribution margin actually. This particular program is below the median contribution here in blue. It's pretty close to the 25th percentile in terms of contribution, which is not great, bottom quarter, and way off the top performers. That's a 75th percentile. Logistics, they're right about the norm here, just about the 50th percentile. Chemistry, for whatever reason, that could be that their revenue is lower, could be that their costs are higher, but way below what the normal margin would be. So 2 observations here. One is when you're evaluating new programs, knowing what the normal cost per student credit hour will be for a new program, actually very helpful in estimating the economics. And that's data we now have collected from over 40 institutions. The second thought is when you're looking at your current programs, very helpful information to have so you can decide whether you're running them as efficiently as you should. So lots of help in getting benchmarking, and we now can provide that at the course subject level. So we can actually benchmark music performance, for example, down to the 100 level course. So you're getting the level of granularity you need in order to act effectively. Now let me turn it over to Rize and have them share with you how they can help you launch new programs.
Perfect. Well, thank you, Bob. I'm gonna take over the screen sharing here. Perfect. Well, before I jump into it, I'll start with a little brown nosing. We were really excited to get invited today. I've got my copy of Start, Stop, Grow truly at my desk. And to make sure you don't think I'm like totally kidding you, Bob, there's actually notes on that front page there that we have taken and put into our work. So it's amazing to be on a webinar with Gray because the concept of program evaluation, program economics is something that we have tried to learn from in the work that we do at Rize. It's also a very natural extension of the work that happens at Gray in the sense that from our perspective, part of what our model is trying to do is help more programs be contribution margin positive to accelerate time to launch and also ensure that the success thresholds that you need in order to make a program margin positive are a lot lower. And we'll get into a lot more detail about what that means. But at the core of what you're going to listen to today, and Bob summarized this very well at the beginning, you're going to learn about a model that can help you start new high demand majors, minors, concentrations more affordably and more quickly. Very, very quickly about myself, since I already sort of did a brief intro. I'm Charlie. I get the privilege of leading our partnerships team here at Rize. We are based in New York City. I live in Brooklyn, but our team is all over the country. So we have people in Ohio, in California, in Virginia, in Canada, and Texas. We're sort of a pandemic company in the sense that we have people all over. My personal journey, I joined Rize in 2020 when the company was still incubating on Adrian College's campus in Adrian, Michigan. Joined a few of my now colleagues who spent a little bit even more time there than I did. But the reason I bring that up is what we're going to talk about today is the type of model that I think should really resonate with a smaller, historically residential campus. We're going to talk about a concept that relates to online course sharing, but it really was developed out of a traditional residential campus for that particular use case. And those use cases have extended over the years. Quick agenda so you all know what we're going to run through really quickly. The first is, how does this concept of program sharing work? I want to talk about the partnership services we provide. I tried to write down what Bob said, but he talked about with the PES tool, the idea that it's not just a piece of technology. You need to have the right people and process wrapped around it. That's exactly what we've tried to do with our model. This is much more than course sharing. And so I want to use the partnership services section to touch on that. I want to talk a little bit about the pricing because I do think that's a core piece of this model. So you all have a feel for that. And then I want to talk about a couple of case studies of growth. My goal for today is, one, hopefully whether or not Rize is interesting, you get some ideas that may spark something that you can use on your own campus, but it's a short presentation, so I won't be able to get into every last detail. And so my hope is that I can provide you the foundation, if this is of interest, to decide whether or not going deeper with us would be helpful. I want to start really briefly with the problem. I think this problem is one that I don't need to belabor. When we were starting out and thinking about Rize, a key thing that we kept coming back to is that when you look at these factor analyses of how does the student choose college A versus college B, as everyone on this call knows, there are multiple variables that impact a student's college choice. Location, cost, sports teams, it's a variety of things. But as we looked at all these surveys, there was one thing that kept rising to the top, and that was academic programs. What majors, what programs are available to me? And then there was a second finding, particularly for smaller institutions, and that's that they offer a fraction of what larger competitors offer. So you've got what is in many surveys the most important decision factor, and it's a gap for a lot of smaller institutions. So the next question that sort of begs is, well, why is that the case? Why is it that smaller institutions have a thinner catalog? And again, probably not anything too revolutionary here, but as we talked to institutions, what we kept hearing was, one, staffing is really challenging. Even if I had the budget, I'm not sure I could find the cybersecurity faculty member. Second, there's that time-intensive component. As Bob mentioned, it can be 2 to 5 years to bring that program to market. Those things compound to create costs. If you're hiring, if it's taking time, if you're developing resources, that's going to lead to a lot of upfront investment. And then there's also going to be an investment to keep the lights on. And all of that creates a ton of risk or uncertainty. Is this program going to be successful? You don't want to be an institution that invests $1 million and ends up with 6 students in it. And this is why when we went to campuses, we heard, I'd love to do cybersecurity, but I don't really know how. I'd love to do data analytics, but I don't really know how. I still don't have computer science because I lost my faculty member last year and I don't know how to keep that revolving door from stopping. And so the whole concept here was, if those are our challenges, if each institution's battling with this, well, is there a shared type of model that could work? And so to kind of get to the solution here, what are we going to talk about today? We have developed a consortium model where every member of that consortium can access sets of shared curriculum, course clusters of 5 to 7 on average, that they can access and tap into to create these new majors, concentrations, certificates, et cetera. And the goal of that program development is to grow enrollment, and to do it because we are finding the areas of demand, the areas of not just labor market analysis, but when you look at that Google search trends, where are students voting with their feet? How do we make sure that we're delivering the market-aligned programs they are looking for? Really briefly, today we have about 85 partners offering over 430 different types of programs. And when we say program, it's sort of a catch-all for major, minor concentration. If there are questions that I go through as a housekeeping item, I should have said this, please definitely jump in with those. In terms of how it works, I want to break it into a few steps. The first step was trying to decide what are the types of programs that should be made available through this kind of model. And we try to keep it fairly straightforward and focus on a lot of the things that Bob mentioned. We're looking at labor market information, we're looking at demand trends from students, and we're trying to also figure out what can complement your existing catalog. What can we deliver through this model in a really effective way? Nursing, I don't think it works that well in this model. And you'll sort of see an example in a second of how it works. One day, I hope we crack that, but it's not just what does the data say. We're trying to find the areas where we can take the existing infrastructure in your catalog and supplement it or complement it to create something new. Business, technology, healthcare are some of those core areas. I'm missing nutrition in the healthcare bucket, which we actually just launched as one of our most recent programs. So there's one missing in the bottom right there, that is nutrition. Once we've taken this list, what happens next? And I'm going to use supply chain management as my example. That bullet point of supply chain is ultimately a set of 5 courses in the case of supply chain. We work with subject matter experts in both academia as well as industry to create that curriculum from the ground up. So for supply chain, we happen to work with Dr. Rudy Leuschner at Rutgers, and we worked with Harry's Razors as our corporate collaborator. That blend of academia and industry is important because we want to ensure relevance. And we want to ensure that relevance continues beyond the launch of the program, that we are constantly updating the content to make sure that it is delivering the skills that are in demand in the workforce today, and also making sure that new research is being embedded into those programs. So you identify the program, you have a set now of 5 classes built in partnership with these experts. The next step is an evaluation. What's missing from your catalog? If you were to ask Dr. Rudy Leuschner, well, what is a supply chain degree? He would say to you, it looks a lot like a business core, plus 5 to 7 classes that are specialized in supply chain. And that was a common finding that we had across a lot of our partners. In many of these high growth areas, they were only missing a relatively small percentage of the total credits to launch that new degree program. And so here, the idea was, what if we used this online consortium model to plug those gaps? If you think about the total degree plan, and one thing I should have mentioned earlier, so apologies for taking so long to get there, we are entirely focused at the undergraduate level today. As you listen to this, we have ambitions to expand into the graduate space over the next couple of years, but everything here is undergraduate. And so when you think about the 120-ish credit hours that a student is going to complete, in this particular example, 15 of those credit hours are going to come through this shared model. All of the courses are taught by instructors from teaching institutions within a consortium, the Lower Cost Models Consortium. And so all of these courses are coded in your own catalog, taken for credit on your campus. We sequence these 4-year plans, so a student is typically taking about 1 class through the consortium model each semester. And there's a lot of consistency, same calendar, same learning management system, same pedagogical principles. So we've, as Rize, done a lot to create consistency in what to expect from students. And the ultimate goal here is best of both worlds. Go to campus, live in the dorms, play on that sports team, get your general education curriculum, have the business core, build faculty mentorships, and now, using this type of a model, have access to a much wider set of skills and majors that are going to lead to really great careers. I talk about it often as if it's only for someone who's on campus. We also work with plenty of partners where they are plugging these online courses in addition to their existing online content. So absolutely, this could be run entirely online for a student who is pursuing that modality. This kind of gets to that piece of the wraparound support and the wraparound services. And what we really talk about here is a good program is much more than just adding codes into your catalog. There needs to be something more than just a course sharing foundation. And so what we've really invested into over the last several years at Rize are partnerships teams that can layer on top to help you do two core things. We need to make sure that you grow enrollment into these programs successfully. And we also need to make sure that your students are successful. And so we've invested into a partnership success team. We've invested into an enrollment marketing team, and we've invested into an academic support team. Before we even get there, we also have a partnership development team. Our responsibility is to make sure that you all pick the right programs, that you deploy these with the right curriculum mappings. We talk about budgets with your team. We help you through governance. Any external accreditation, whether that's from a regional accreditor or subject specific, we'll work with you on. Once you actually have programs approved, we have an entirely new partnerships team that is going to make sure that you're optimizing your partnership. As I mentioned, two of the core buckets there are working on enrollment and working on student success, but you'll have someone who will be constantly checking in to make sure that you are achieving the goals that you want. And I'm going to really skim through this piece of it, but on the enrollment side, we're going to provide your team with content, things that can accelerate the marketing launch, that you can get this message out, press release templates, pre-written emails, training materials for your admissions staff. We have a team that will actually work with you throughout that process to make sure that we are meeting monthly. What does your quarterly funnel data look like? Evaluating that on an annual basis from a benchmarking perspective. So there's a lot of supports that we are going to wrap around.
Charlie, we do have a question for you if you have a moment.
Absolutely.
Do you match consortium with accrediting firms that are already used?
Consortium with accrediting firms that are already used. So I may need a slight clarification on the question, but I'm going to take a stab and hopefully that this will help with what you're getting at. We work with institutions across the country. And so whether it's you're on the West Coast and you work with a WASC or your NESHE or your SACS, we have worked with an institution in your region. And then as you get into subject specific, if you're an ACBSP or a AA or an IACBE on the business side, we have familiarity with all those different accrediting bodies. And so what's really important, though, to kind of go back to the consortium word, is Rize is more of an infrastructure layer for this to work. We are not the provider of those courses. And so because all of the teaching institutions are Title IV eligible, regionally accredited institutions, this falls under a consortial model with other Title IV eligible entities, as opposed to a contractual arrangement with a non-Title IV eligible entity. That was a lot of acronyms and jargon. So I hope that somewhere in there, I hopefully got to the question.
Thank you.
Bob, did you have something you wanted to add in?
We're all good. Thank you.
Perfect. All right, last couple of pieces here. We also make sure that we give you visibility on the academic side. So you'll have the ability to see how students are performing in courses, snapshots, not just attendance, but multiple times throughout the semester. How are they doing? We want to make sure that this is a partnership. And that's kind of the wraparound again, where you're able to advise students appropriately. You're able to support students appropriately. And a lot of that is setting up really good lines of communication where your advisors, where your faculty have the ability to know how our students doing. Just one more example here. At the end of every semester, you get learning outcomes reports so that you can actually assess these programs. I'm going to finish here with pricing and then a quick couple of case studies. We operate on a subscription model. That subscription model is a fixed annual fee each year to get access to a program, and then you pay a per student cost for each course. So to kind of go back to the program economics, you're going to have this fixed annual fee, basically to have access to the program and the services. And then your cost per credit hour for us is $170 about. So to kind of put that on the screen for you and tie that all together, the annual subscription fee starts at $20,000. Most of our partners do 3 or more programs in a bundle, and so we're able to lower that annual fixed fee. That student registration fee I mentioned, and we sign 3-year contracts as a standard, but there's also a performance guarantee. And so if you are not satisfied with the enrollment or the student experience, you actually have the ability to unwind that contract early. And I always say that that termination option could be for 2 reasons. Maybe we don't deliver. That has not been something that's happened to date, but that could happen. The other reason I think is more exciting is to think about this is maybe you do so well that over time you decide that you're going to take a program internally. You're going to use those resources and find a way to continue to expand on it. So we really try to think about this as a flexible way to do program and portfolio management. To go back to those barriers, if cost, time, and risk are your challenges, we're trying to drive down that upfront investment, drive down the annual cost to maintain it, allow you to bring it to market in just 1 semester, give you more flexibility. And as a result, even though we'll obviously shoot for more than 2 students a year, you would sort of be able to make the math work at those levels. Example of a budget as an example here. Obviously, there's different ways that you can look at the program economics, and this is overly simplified. And there's plenty of overhead that you need to think about beneath this line. I think somewhere in the book, it talked about kind of looking at a 3-to-1 ratio from your program level economics relative to your overhead. But what we're trying to say here is, I mean, here's a program that at a school like Adrian has over 20 students. And that's a $35,000 a year program to operate. That's creating a lot of margin to invest back into those missional areas of your institution. So finally, some case studies here, and I promise I'll wrap up in the next 7 or so minutes so that we have time for good Q&A. The first institution I want to talk about is Rochester University. And as I go into these case studies, one thing that I always want to say is we have the privilege of working with some really amazing partners who are performing incredibly well, even without Rize. So I'm always quick to frame these case studies as saying, do I think that we were supportive in their overall success? Yes. Do I think that we are the only reason for that success? Absolutely not. These are institutions that have been thriving of their own accord sometimes. And so I always want to sort of call out that we are fortunate to work with teams that have really seen strategic vision and said, I'm going to plug this group in because I want to build on some of my momentum. And the reason I say that is when I think about a school like Rochester, when they came to us, they had already outlined a strategic plan that talked about focusing on strengthening their academic program offerings, talking about assessing workplace demand using market research. And so they had already, that backdrop existed when they sort of came to Rize. And the other backdrop that existed was in fall of 2020, they actually set record enrollment as an institution. And this is in a state of Michigan that I think the numbers are 4-year privates are down roughly 13% over the last 4 or 5 years. And so I say this because sometimes I think colleges think, you know, when's the right time to keep expanding? And I think a school like Rochester saw now is not the time to take the gas, take the foot off the gas. We need to keep evolving and adding more programs in line with that strategic plan. So we worked with Rochester and we pulled together a number of programs across business and arts and sciences. And if you could think about what would it have cost Rochester to start new degrees in healthcare administration, certified financial planning, neuroscience, data analytics, esports, digital marketing, and I think I might have actually missed one on this slide, in 1 year. In 1 year, they were able to bring all these programs to their institution and really think about these are the types of things that admissions was hearing students wanted more of. They wanted more variety in business. They were interested in things like esports or data analytics. And what we were able to work on together is they brought these new programs, was actually 7. They were able to lift the number of applications into these focus areas. And today, a few years into the partnership, they have over 60 students who are declared in one of these programs. And Scott Samuels, their VP of enrollment, was kind enough to give us a quote. We were losing market share because we weren't growing the academic programs that students are asking for today, and cost was the biggest barrier. I think cost and time are 2 things that we were really able to solve for Rochester. Second institution that I want to hit on really quickly is to give you Holy Family University. Very similar situation, an institution that really knows what they're doing and is on top of it. Another institution that came to us with a newly printed strategic plan that included strategic alliances, that included a innovation of the academic portfolio. Bigger institution than Rochester, also a little bit more grad focused. Holy Family's over 3,000 total students when you factor in their graduate population. And another thing that I want to just call out is just similar concept to Rochester. Holy Family, when their new president arrived, was in a strong position. Enrollment was headed the right direction, but they said we have to think strategically. They're sitting within a Philadelphia market that's saturated, that's had some consolidation, that's had some closings. And so they were looking for ways to stay ahead of the curve. And one of the challenges that they were running into, to go back to those barriers, was the technology portfolio was thin. Really strong nursing program at Holy Family, really great business program, really great arts and sciences, not a lot in the tech space. And so there was a new dean that came in who said, we would love to do this, but finding a cybersecurity professor right now is challenged. The expense to get this started feels prohibitive. And I'm sitting in a really competitive market where, as great as those stats are I'm looking at on cyber, are we going to be able to figure it out? And so the first thing we worked on was cybersecurity and computer science. And I thought it was really interesting, the data that Bob presented at the beginning, because I took this out earlier today because I thought it was too confusing. 2 years ago, computer science was above cybersecurity. This year, it totally flipped on their incoming class. They had more students and a significantly number of more students moving into cybersecurity relative to computer science. So over a couple of years, they've made a really big splash with cybersecurity and applied computer science. And it sort of led us to a phase 2 of the partnership, where they're now expanding into more concentrations within their business school: healthcare admin, professional sales, supply chain management. And there was even a third phase of this growth story where they lost their analytics faculty member. And it is really challenging to find an instructor in that area. And so after a challenging search, they actually ended up partnering with Rize on that business analytics program, and they have over 25 students there. So if you kind of take this all together, Holy Family actually renamed their School of Business and Professional Studies to the School of Business and Technology. They were able to double the number of programs that they offer. They were able to triple the size of the incoming class. And I'll reemphasize one more time, a lot of this is stuff that Holy Family was doing anyway. I mean, their dean there is tremendous. She has put a ton of energy into that school. But nonetheless, I think what she said about Rize being a piece of their overall success was, this was one of the easiest, biggest impact things I've done. We were able to quickly move on some really high demand programs, meet that market need really quickly, and they have over 100 students in Rize programs. So last thing, one more fun ad. I saw this headline literally yesterday. Holy Family's highest enrollment in 25 years. And they're building new buildings. They just acquired another building on a different campus that's not too far away from their Northeast Philly location. So a really fantastic school to work with, and one that we are fortunate to have had the chance to work with on some exciting programs. So that is all I had for you today. I'll make sure that I'm here for any questions you might have, but thank you for giving me so much time to give a little bit about Rize and some of the institutions that have succeeded with it.
Charlie, it's really exciting. I think one of the things that I want to make sure people get as they walk away from this is 80% of the courses a student's going to take are courses that are already on that campus. Only that last 5, the specialization, really end up being something that's done through Rize. So the margin numbers you were looking at are only on the part of that program that's taught by Rize. There's all the margin on the English course, the math course, and so forth that people had to take as their gen eds and other courses before they got to the Rize part of the program. So the actual incremental impact on the institution, I think, is quite a lot higher. And you're still the institution is still a prime delivery vehicle for the education that student receives. So I think it's not like an OPM where you kind of hand them the keys and they take the car. This is much more of a finishing component to it rather than a replacement for what you're already doing.
I think that's a great, go ahead.
Have you been able to work with schools with a large number of international students who can only take one online course at a time typically?
It's a really good question. It somewhat depends on the program and the number of credits, because, and also, are you expecting them to take other online courses? So I'll give you 2 examples. That supply chain example, 5 courses over 4 years or over 8 semesters, we can make that work with thoughtful 4-year planning. Computer science is 12 courses. I am now over 1 per semester. So unless we're creative around summer terms, that could be more challenging. So the overwhelming answer is yes. This is typically something that we can figure out given the percentage of credits, but it will depend on you, the number of credits necessary, and whether that student is also needing to take other online courses.
Great. Any other questions?
If I could add one thing to what you said, Bob, I think that finishing component is important, both from a margin perspective, but also from a campus buy-in perspective. Because I think a really important piece of this is if you are in the business department, and here comes a new concentration, I think an understandable concern would be one of cannibalization. What's going to happen to some of my courses? But it really isn't dominating that student's 4-year journey. And everyone who takes Supply Chain 101 is going to take Principles of Management, is going to take their accounting courses. And so it's really a way that you can grow a department. And yes, some of those credits are going to flow to a different direction, but there really is a way to see this impact positively that overall department strength.
Well, and actually, in a lot of cases, it's going to impact across the institution if that student's coming up through general education curriculum before they get there. So it could, it's going to fill up some of those English courses and so forth as well as they get up to the level where they're going to specialize. I'm curious where you guys are on graduate education. I would think this would be a great way to offer a 4+1, that would normally be a 2-year graduate degree. What are you thinking on that?
Yeah, this might be one of those decisions that once we hit the go button, in retrospect, you wonder why you didn't do it sooner. We have been really focused on this idea that a lot of new initiatives die from indigestion rather than starvation. Trying to do too many things at once rather than not having enough to do. And so I think that's been mostly, despite a lot of trends that would suggest we should be there, it's been trying to get out of the gates smoothly and deliver a good experience. But truly, we had a meeting on graduate programs a few days ago. And if anyone on this call wants to chat about it, we're starting to kind of set up some of our initial discovery to figure out where would that make sense. I think one thing partners have guided us to is the MBA concentration as a potential area of creating breadth around that core MBA. But it's something that I'd hope to say if we do this again next year, that is actually something we do now.
Great. And let's see if I can share my screen now. One thing I want to encourage everybody is, the general topic here is growth. And I think there's been a substantial perception over the last few years that growth is impossible. We have these headwinds and, we can't get there. I believe many of those headwinds are breezes and some of them are not real at all. And actually there's some real headwinds that people don't talk about. But the bottom line is in institution after institution, there are examples of growth and very substantial growth in all kinds of different schools. Public universities, one here in Massachusetts, doubled over the last 10 years. Massachusetts is not a growing state, so it's not a demographic trend that's supporting that. Little college in Maine that went from 500 students to 2,500 students over a period of years. As a small private, this is doable, but you've got to act. And one of the dimensions of action I think is really important is program innovation, but there are literally dozens of others, adding sports teams, developing international, building relationships with your local community college. The list goes on. And I think unless you've exhausted everything on the list, there's still a chance that you can grow at your institution and you don't have to accept these negative sort of down, sky is falling prognostications as truth. Most of them just aren't. The demographic cliff is a great one. There really is no cliff. I've looked at it. There's some states where things are declining. And the only one that I know of where it's substantial is Michigan, as you mentioned. But most other states, the population of college-age students is still growing, albeit slowly in many. And yes, it will go down 1% a year, but that's not really what's driving the problem with enrollment. I mean, 1% a year doesn't begin to explain the declines we've seen recently. So I would encourage you to be optimistic, but also to take action. that it aligns with your optimism. If you do that, you can grow, and certainly Rize is one of the ways you can accelerate that growth. So thank you all for joining us today. We had a question earlier about community colleges and associate degrees. We do cover those in its own webinar. We just did it yesterday, so any of you who want those charts, they should be downloadable on our website shortly, or get in touch with some of the folks that are here on the phone with you, and we'll be glad to send them out.
Yeah, feel free to send an email to info at Gray Associates, GRAY Associates.com, and I will get them right out to you.
And we'll be back again on November 30th with another webinar and another growth accelerator that can help you take advantage of the opportunities that are out there in the market. Thank you very much.